So I believe UnitedHealthcare is the most undervalued stock in the S&P 500. And I'm going to show you guys why I think that is the case here in this video. Now, I did a recent video where I went into a 10-year financial history of UnitedHealthcare going all the way back to 2015. If you want to check that video out, I'll put a link somewhere up here. You can click on it, go take a look. I'll also put a link down in the description as well if you want to go click on that and go check it out. Now, this video in particular is really looking at the intrinsic value of what UnitedHealthcare stock should be today. Now, you're going to take a look at my discounted operating earnings model. I will project revenue out over the next several years, and then also look at the operating margins of the business. Now, operating margin, when you look at UnitedHealthcare, has some of the best operating margins in their space, period. You're talking over 8% on average over the last 10 years. You look at other companies in the same industry, like a Humana, for example, they're in that 3 to 4% range. I would consider a really good company in the insurance business space really to be around that 5% range, and UnitedHealthcare has been around 8%, around like between 8 and 8.3. So they have been tremendous over the last 10 years. They've had significant revenue growth. If you go take a look at that video that shows the 10-year history, I mean, they've had over 10% growth per year over the last 10 years on sales per share, earnings per share, book value per share. The return on invested capital, the return on equity has been over 10% as well. They also have a tremendous balance sheet on their books. Now, they've been going through a ton over the last 12 to 18 months. I mean, they're on their third CEO right now. They've missed earnings the last 2 quarters. They took away guidance, the reinstated guidance, but lowered it what it was originally at the beginning of the year. The recent DOJ investigation, there's a lot going on with this business, no doubt about it. But when you get down to the nuts and bolts of this company, they have a tremendous balance sheet and they generate a ton of earnings on a normalized standpoint of around $450 billion of revenue, which they're supposed to bring in this year. At a normalized 8% operating margin, that would be around $25 billion plus of operating earnings for the business. Now, they're not going to quite be there this year. They've been going through, like some issues I've been talking about, including the medical costs have been higher across the space. And this is not just for UnitedHealthcare. I mean, you look at Humana, you look at other companies in the space as well. They're all dealing with more medical costs than they had anticipated. These are companies that spend a ton of money on actuary data. Companies go out there, they put together a lot of data to figure out, okay, what are people spending this year, looking at data going out to next year. And so there's companies that's all they do is go out and do this. And these companies just completely missed the boat this year. A lot of people have been going to the doctor this year more than normal, and the costs just have been higher than normal as well. And it's hurting all these companies across the board. The difficulty with insurance companies is that they're just not as flexible as other companies, right? So if you're in a manufacturing company, you can raise your prices, whenever you want. And then obviously that's going to take a while to feed through the income statement and see that. But for an insurance company, they may have to wait an entire year. So a lot of these companies in the fourth quarter will readjust their premiums for the following year, which I expect UnitedHealthcare to do and other companies in that space. So no doubt, insurance costs are going to go up next year, no doubt about it, across the board. So definitely get ready for that in general. But again, they can't pivot and go and move as quickly as some other companies. So they're just kind of stuck in the space right now. And with medical costs and medical cost ratio going up, you're talking like 400 basis points. That is significant for UnitedHealthcare in general. Now, even besides all that, they're still really in a good spot going into next year. But let's go, change trajectory here and take a look at what I think the intrinsic value of the company is. And when I do this, what I'm trying to do is I'm trying to forecast out earnings over the next several years. So in order to do that, what I do is I look at revenue specifically, try to figure out where the revenue is going to trend over the next several years, come to a operating margin for each individual year. You're going to see this. And then based on those total earnings, future earnings of the business, I'm going to discount those back to today to get to a net present value of future earnings. And then from there, I can get an intrinsic share price or fair value for the stock based on the assumptions here today. So if you find this valuable, hit that like button. I personally appreciate it. It really helps me know I'm doing a good job for you guys. Will help push this video out to other people too that may be wondering about UnitedHealthcare, whether they're invested or not, or want to invest in general. So let's go take a look at my discounted operating earnings model now. All right, so on the left side here is my estimated revenue for the company over the next several years. So for 2024, the company's earnings came in at, or total revenue came in at $400 billion. Now for this year, I think the company is going to do around $445 billion. Now you're talking over 10% growth from the previous year. And that is in line with what management's saying and what analysts are saying as well. Now let's take a look at the growth over the next few years. And this is what it comes out to be. So I believe the company's revenue is going to dip and have about 7% year over year growth going into 2026, which would put at $475 billion. And then I think it's going to go to $510 billion. $540 billion, and then roughly a $575 billion. So you can see that's a 7 to 6% growth per year over the next several years. So if we look at a CAGR basis for the company, I think revenue is going to grow roughly 8% per year on the top line. And my 10-year financial history showed the company growing between 11 and 13% per year over the last 10 years. I think it's going to take a dip over the next several years, trying to be conservative. I also think the company is going to buy back roughly 0.75% shares per year over the next several years as well. They've been buying roughly about 1% of their shares per year back. I think that's going to dip, particularly when it goes into next year, and I'll get into the operating margins here in a second, based on potentially the DOJ coming out and basically, billing the company or telling they're going to have to pay back some of the money based on some of the investigations that they're doing. So I think that's going to go down a little bit, but I think it's still going to be there. Now, as far as operating margins for the business, now last year they came in at 8.1%. Their normalized operating margins are between 8% and 8.3%. I think it's going to dip this year. I think it's going to be around 6.5% because of those medical costs going up. With the additional 400 basis points for the medical cost ratio, just more costs than they anticipate going into this year. I think it's going to fall around 6.5%. So operating earnings last year were around $32 billion. This year, I think it's going to dip to around $28 billion. I think that's just where they're going to be. Now, as far as next year, I think it's going to take a significant drop to 2%. I believe the DOJ is going to investigate what they're doing right now, UnitedHealthcare. I think they're going to come out and say that there were some overpayments. I think they're going to make UnitedHealthcare an example in the space. I have no idea what it's going to come out to be. I don't know if it's going to be 5 billion, 10 billion, 20 billion, but I do believe they're going to come out and make an example of UnitedHealthcare. I think it could be in that $5 to $8 billion range, just to make them an example. There's other risks associated with that as well, which I'll do a future video with that. But I think operating margins are going to fall to 2% next year based on the DOJ coming out and making the company pay back a significant portion of earnings, which would make the earnings drop roughly down to $10 billion. So what I'm saying here is I think the company may get a bill from DOJ from anywhere from $15 to $20 billion. I think it's going to be a lot less than that. I personally think it's probably going to be around the $5 billion range, just my opinion. But nonetheless, I'm still taking effect here that they're probably going to get a big overpayment and payback to the DOJ. Now, after that, we're going to see operating margins grow, in my personal opinion. 7%, 7.5%, 8%. So several years out, they're going to get back to their normalized range. the bottom end of their normalized range around 8%. So the operating margins are going to grow from 35 billion, 40 billion to 45 billion dollars. So from an operating earnings standpoint, I think the company is going to grow roughly 7% per year over the next several years. Now, if we factor in the buybacks as well with the business, I think it's going to be around 8%. That's what I think it's going to be. And we want to see an earnings per share basis. This is kind of where it falls out over here as well. And also net present value of the earnings there too, if you want to check that out. So based on this information here today, with operating growing 8% per year, also in line with about revenues going to grow 8% per year, I get intrinsic value price of $417. And today the stock is trading at $250. So if these are correct, if my assumptions are correct on revenue, operating earnings of the business, that would make the stock currently at a 40% margin of safety. But here's the key, I think, when it comes to UnitedHealthcare. This is not something that is going to turn around very, very quickly unless the DOJ comes out and says, we're not going to fine UnitedHealthcare. We're not going to say, they're not going to ask for overpayments back, anything like that. If they come out and say that in the next 6 months, I think this thing is going to bounce very, very quickly. I think this is going to be a slow burn. I think it's going to go into next year before the DOJ comes out and says something. I honestly do think UnitedHealthcare is going to have to pay something. I don't know what that is, but they're going to have to pay probably something because they're going to want to make UnitedHealthcare an example in the space. So I think this is like 2 years, potentially longer, before we see the returns on this stock where I think it is going to be. So if you're someone that's a short-term trader, you're looking at trying to get in and out of stocks, I personally wouldn't touch UnitedHealthcare personally. This is for me. I'm a long-term investor. I like to buy companies that I believe are undervalued. I think that have a high return on invested capital, that have good management teams in place that allocate capital correctly. And UnitedHealthcare has done that through the dividends, share buybacks, their strong operating margins, and so I'm willing to pay a price for UnitedHealthcare right now that I deem is of good value, and I'm willing to hold that stock for a long period of time, years even into the future. Peter Lynch, from his book From One Up from Wall Street, he talks about in there that some of the best returns that he's gotten on his stocks were between 4 and 7 years after holding them. So for me, it's not one of those I want to buy and then get a quick return. No, I'm trying to buy for a long-term approach. I'm a value investor. I'm trying to buy companies that have value, that I think have a long runway ahead of them, that have gone through events. And certainly UnitedHealthcare has gone through multiple events, and that's why the stock has fallen so much. It would not be trading at $250 here today if it had not gone through multiple events. Keep in mind, most people, whether it's retail investors, whether it's hedge funds, they're looking at a short-term approach or mindset, right? They're looking at a quarter out, 6 months out. At the most, a lot of times they're looking a year out. So if they think a stock is not going to bounce back in a year or less, and keep in mind that a lot of hedge funds will put limit orders on the stocks that they have. So if they fall to a certain price, it will automatically sell it to get out as it's going down. So I think that's what's happened a lot with UnitedHealthcare too, especially being as big as it is. When you see stocks fall and they fall very quickly, they're just hitting these limit orders and bouncing down, going down, going down, going down. So I think that's what's happening with UnitedHealthcare. And hedge funds and a lot of other people don't want to buy into companies that they have no idea what's going to happen over the next year. For me personally, again, I'm a long-term investor. I'm willing to sit back and wait to see what happens. And I think it's going to take a while for UnitedHealthcare, but I'm okay collecting that dividend, watching what the company does, unless the story changes. If the story changes drastically with the company, then that might change my mindset. But I don't know anything now that I didn't know a month ago or 2 months ago. It's still the same. So I'm willing to buy and hold for the long run and see what happens with this company. But I would love to hear from you guys. I mean, do you think healthcare stock is a buy right now? Do you think it's Yeah, it's a short seller opportunity. What are you guys doing with United Healthcare? Love to hear from you guys in the comment section below. If you want to know how to value companies, I do teach you how to do that on my Patreon, including my discounted operating earnings model I showed you here today. And I have a few other models as well too. So if you're interested in knowing how to value companies yourself, figure out the fair price, I'll put a link down below to my Patreon as well. Get access to my Discord channel. You get access to my Patreon only posts as well. Love to see you over there if that's something you're interested in. Thank you guys for watching. I really appreciate it. Take care and God bless.